For decades, the US dollar has been the world's money, the currency of global trade, trusted by governments, banks, and businesses everywhere. It's the backbone of international finance, the standard for pricing everything from oil to gold, and the safe haven in times of crisis. When countries trade oil, buy airplanes, or build up reserves, it's almost always in dollars. The greenback is the language of global business. This dominance has given the US enormous power, allowing it to borrow cheaply, steer global affairs, and impose sanctions that can isolate entire nations from the world economy. The dollar's rise began after World War II, when the Bretton Woods Agreement crowned it the world's reserve currency, pegged to gold, and trusted above all others. America could print dollars to pay its bills, while other countries had to earn them through trade or investment, a unique advantage that shaped the modern world. This exorbitant privilege let the US shape the global order for generations, influencing everything from development loans to military alliances. But the world is changing. New economic centers are rising, and old certainties are being challenged. New economic powers are rising, and the foundations of the dollar system are being questioned by major players who want more control over their own destinies. The confidence that once surrounded the dollar is fading, as countries diversify their reserves and seek alternatives. Subtle tremors are shaking the financial system, hinting at a coming shift that could upend the balance of power. The era of the dollar's unquestioned supremacy may be ending, as new alliances and technologies emerge. The world is watching and preparing for a future where the rules of money could be rewritten. What comes next could reshape everything, from the way nations trade to the power they wield on the world stage. America's soaring national debt has become impossible to ignore, with numbers climbing higher every year and warnings from experts growing louder. Relentless money printing has flooded the world with dollars, fueling inflation, driving up prices, and eroding trust in the stability of the US currency. Countries now see their reserves losing value, and many worry about the risk of being cut off from the global financial system by US sanctions. In response, nations like China, Russia, India, and Brazil are increasingly trading in their own currencies, bypassing the dollar's dominance. They're also building new financial systems and payment networks aiming to reduce their dependence on the US dollar for international trade. Central banks are buying gold at record levels, seeking safety and stability outside the dollar's reach, and diversifying their reserves. These moves signal a clear shift. Across the globe, countries are hedging against the dollar's decline and preparing for a new financial era. The cracks in the foundation of the dollar's dominance are widening, threatening the stability of the global financial system. Around the world, the search for alternatives is accelerating as nations look for safer and more reliable options. If the dollar fades, what takes its place? The world's financial system is built on trust, stability, and convenience, qualities the dollar has long provided. But as cracks appear in that foundation, the search for a credible alternative grows more urgent. Gold is trusted, but too rigid for today's complex economy. Its value is stable, but it can't easily support the speed and scale of modern global trade or digital transactions. A multi-currency world could emerge, with the euro, yuan, and others sharing reserve status. This would mean no single currency dominates, but rather a basket of trusted options. China's yuan is rising, but trust and transparency remain hurdles. Many countries are cautious, watching to see if China can open its markets and build confidence on the world stage. Digital currencies, both government-backed and decentralized like Bitcoin, offer new possibilities, promising speed and innovation. Yet, none are ready to replace the dollar's vast infrastructure or its deep-rooted global acceptance. The dollar's dominance is like a global language. Everyone uses it because everyone else does. Its network effect is powerful, making change difficult. Shifting to a new standard would require unprecedented global coordination. Nations would need to agree on rules, regulations, and trust a new system. For now, the dollar remains on top, but its grip is loosening as new contenders and technologies emerge. The world is experimenting, testing new ideas and systems, but no clear successor has emerged to claim the throne. The transition will be messy and uncertain, with risks and opportunities for every nation and investor. The next chapter is unwritten, and the world is watching to see who will write it. A weaker dollar would hit Americans with higher borrowing costs and pricier imports, ending the era of cheap goods. For other countries, dollar debts would shrink, but reserves would lose value. Global markets could see wild swings, triggering instability and economic shocks. America's power to use sanctions would fade, and new centers of influence would rise. The world could become more balanced, or more fragmented and competitive. The decline of the dollar isn't just economic, it's geopolitical. We're living through a historic transition. The outcome will shape the world for generations.